Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Go ahead and hit that like, subscribe, and notification bell like the prompter instructs you in your bottom right-hand corner. Listen, there's a lot to go into as we have had such a whipsaw in the market. It has been absolutely a full-on roller coaster ride and a meltdown by the markets, right? This is brought to you by Stock Up You. Let's get right into it. All right, I'm going to bounce around. So listen, the Fed looks at inflation and unemployment. And today we had a strong jobs, right? We had a lot of jobs added. So we had the job market is showing that it was strong. That was on yesterday, Friday, right? And so that was not pricing in all of the layoffs, and it wasn't pricing in the tariffs. What do tariffs do? Tariffs lead to unemployment. So we have to see, a lot of analysts are calling for a slowing in GDP and a slowing in the overall market due to tariffs if they continue. Now, remember, the Fed looks at inflation, which will creep high due to the tariffs. So inflation goes up with tariffs and jobs go down, all right, which will cause the Fed to lower interest rates. So those two things could happen, all right? Now, another thing could happen. We could enter into a recession and the Fed will start to lower rates. Those are the things that causes the Fed to lower the rate. Now, Fed Powell on yesterday was speaking. He didn't sound like he was budging. He wasn't sounding like he was going to even consider lowering rates right now. So that was just not a deal. All right, let's just go over this right quick. Look, we saw what happened yesterday. It was an absolute bloodbath. Look at that. Everything was down almost by 6%. The S&P was down by 6%. NASDAQ close to 6%, and the Dow was closer to 6% than 5%. Let's just call that 5.5%, all right? But pretty much the entire market down by 6%, okay? And a lot of people use the Dow, for those of you that are new, as an indicator, but there's only, I haven't checked lately, there's only about 34 companies in the Dow, right? The S&P, you got 500-ish, okay? Here's another thing, JP Morgan. So JP Morgan raises their recession risk to 60%. You can read it down here. It has ticked up high. Look, the other opinion of J.P. Morgan analysts who raised their forecast to 60% on Thursday, all right? That's up from 40% before President Trump's Wednesday afternoon announcement. But then they also talk about interest rate cuts by the Fed. You can read that report. All right. And now you have Senate Republicans starting to part ways with the president. Let's see if we can play this for you right quick.
President Trump is initiating here. This is a long-held belief that he believes that tariffs will correct those problems. But what's also indisputable is the markets are down about 8% in just 2 days. And I'm getting all kinds of reaction from businesses, farmers in Wisconsin that are highly concerned about what's happening. So those are the facts. I don't know, all I can really do is kind of report the reality to the administration, let them know, how these actions are impacting my constituents. And it'll be pretty much up to President Trump and his administration to determine exactly how long they're going to go down this road, when they can start negotiating with our trading partners. Obviously, some gains, $5 to $6 trillion of investment has been committed. That's what President Trump claims. Some of our trading partners have lowered tariffs. So I just can't predict how this is going to turn out here.
So he goes on to say it's a bold and risky move. I'll play more for you on that a little later. Check this out also on April 4th. All right, that was yesterday. The Dow Jones average plummeted 2231 points in its third largest one-day point decline in record. So the S&P, this was only the fourth time in history that the S&P has plummeted by this much. See here? So I want you to keep that in mind, all right? This is only the fourth time. All right. We'll come back to that. Now, a little bit more on Senate Republicans actually turning their tide, because just like you heard that gentleman, their constituencies, farmers, industry, you name it, we're feeling the burden. And so now we start talking to our senators. All right. Let's take a listen.
Yeah, the impact of tariffs, they're really rattling Republicans on Capitol Hill, and lawmakers are actually starting to break with Trump on this. So far, we've got 4 Republicans. They signed on to brand new legislation that gives Congress the power to approve or roll back tariffs. Senator Chuck Grassley, he introduced the bill, and he's now joined by Mitch McConnell, Lisa Murkowski, and Jerry Moran. And that bill could attract even more support. We've talked to senators like Mike Rounds and Tom Tillis. They say that they like the idea of Congress taking back some of its power over tariffs. And we now know that in the House, Don Bacon has confirmed to CNBC that he is planning to offer a similar bill. Now, other Republicans, they're holding their breath right now. They're not signing on to anything or doing votes. They want to see what Trump and other countries do here. But Senator Ted Cruz actually warned on his podcast today that if tariffs remain in place for the next few months, the result could destroy jobs here at home and do real damage to the U.S. economy if we had tariffs everywhere.
So with J.P. Morgan talking about 60% chance of recession, with Senate Republicans, kind of switching and trying to put the power of tariffs back into Congress's hand, with their constituencies, farmers, you name it, putting pressure on them to talk to the president to bag up. And now you have countries that are going neutral. Israel said no tariffs. And there was another country that said no tariffs. Taiwan, I believe it was. Okay, we'll pull back our tariffs. Now we need to see, will the president reciprocate that and say 0 tariffs on them? Even that amount will actually be positive for the stock market and you and I money. So here's what I wanted to discuss with you. You see, this is only the 4th time of a sell-off in one day, right? Then if you look at the VIX, generally when the VIX gets above a 40, you could start to buy, and you could see it spiked up 50% today alone. The VIX is the volatility index, and we can clearly see that it's above 50. It's on 45. And generally, when it's above 50, you could 40, you could actually start to buy. It doesn't mean deploy all your capital. It means it's a safe area to buy. Now, let's look at you know what? Let's look at this comment. I pinned this comment because you guys need to see this. This is really, really good. And to Lonnie Jackson, who posted this comment, I'm going to check these numbers. You guys check these numbers. But this is such a great post. The stock market fell 90% in 1929. You guys know that was the Great Depression. Okay. The stock market fell 50% in 1973. I remember that. Reaganomics. I believe that was Reaganomics. The stock market fell 35% in 1987. I remember that. All right. I'm not that old, y'all, so quit with the jokes. The stock market fell 55% in 2008. Y'all remember the Great Recession. The stock market fell 35% in 2020, COVID. The stock market fell 25% in 2022, which was the last bear market, the bear market that I speak of all of the time. As a matter of fact, let's go back to that bear market. Right? So we pull up the cues here, and we see here, one of the things that I'm looking at is the RSI, right? The relative strength index. And I'm on the daily, I went hourly, and then I went weekly to try to see if this makes any sense. And we're down here by 34, which it is entering into oversold. So it is a area where I'm cool with buying. Now, at some point, things are just an overreaction. Remember, this is tariff induced. It wasn't economy induced, okay? This whole downward turn. So now you saw in that comment by 35% in 2022. Well, this was the bear market of 2022. And then look at that. Just from the 200-day moving average is what I'm doing. And I'm just going down. And I use the 200-day moving average as a just, a gauge to start putting my toes in the water. So down 21%, right? So here we are now from the bottom to the top. Here we got 13%, but that has changed. This was earlier. So let me delete that. So we could see that it has fallen here. Let's just go here. Let's do this. And we could see from the 200-day moving average, we have fallen down by 14.5%. All right. And this is QQQ. Okay. Now, this doesn't mean that QQQ has, or the NASDAQ has fallen by 14.5%, but from the what? The 200-day moving average. Let's just call it 15% from the 200-day moving average. Okay. And so that's what I'm looking at. Here, it was 21%. Here, it was 15%. But even here, after it gapped down that much, it turned around and went back up. And that's not saying that that's what's going to happen with QQQ or the NASDAQ, which is tech heavy. This is all about tech. Now, let's look at the SPY, which is, the S&P 500. Same deal. Look at that. We're right here at 34 on the RSI. All right. Let's just move that down. And the same thing here. You could see I'm on the daily. We can see in 2022, the same deal here, right? We got almost the same thing. Now, the SPY didn't fall as much as the Qs did because the Qs was what? Tech heavy. All right. Let's go to the info and let's see how far we are down. Yep, we're about 12% down. And so this is simply what I use as a gauge to start entering into a play. And so I'm going to end with this quote again from Lonnie Jackson. This is a great thing. This is such a good post. Stock market fell 90%, the Great Depression. And we haven't had one since 1929. The stock market fell 50%, which was huge in 1973. Google what that was. Stock market fell 35% in 87. All right. And then the stock market fell 55% in 2008. Everybody remember the recession. Nobody had money. The stock market fell more than 35%, or should I say 35% from COVID. And now the stock market has fallen in 2022, what? 22%. And so that simply says that we could have more to fall down, but these are some good, there is a time when you need to start putting your toe in the water. Now, if this pullback was market induced, loss of jobs and high inflation, then I would be looking at going back down 25%, right? But this is all about tariffs. And so what I want you to do is start looking at these indicators, these timelines, look at the percentages of these indices going down, and then you could start to buy either indices, meaning, QQQ, VTI, whatever, SCHD, which is a dividend giver, or you start buying the stock. And now's the time to buy what's called value stock. Remember, on the PE, the number that's lower is better on the price over earnings. Go back to my other video to find out what that is, or make sure you download the top link below, which is Stock Up You. Now, if you want to really follow daily with me, that's Money Moves. That's the second link below. But let me know, what is the number for you to start getting in? But here's what I will say. I'm personally, anything I say is not a suggestion for you to buy, hold, or sell. Personally, I am not deploying all of my capital. Now, I deployed a big chunk of it already. I'm going to be honest with you. And it was not looking good on yesterday. But what I will tell you, I still have some dry powder and I'm still steady putting dry powder in. And this is one of the things I will tell you. As long as you got income, you should be putting money into investments. Number one, because that's one way to pay yourself. Paying bills and putting money in the bank is not paying yourself. Your money has to work for you. And so now if we continue this way, remember how you and myself included was wishing we just put more money in 2022 in that bear market. Wish we had more dry powder to buy everything. You name it, Nvidia, Tesla, you name it. Well, we are entering into that arena again, all right? And so here we go. These are the times when you have to make hard decisions. Now, you may buy and it goes down lower. So what? So what? Long as you're buying it under value, long as you're buying it when some of these stocks are going from oversold to extremely oversold. And so all you need is cash and time. All right. I'm going to leave it right there. Make sure you check out the links below. We'll see you on tomorrow. Live, love, laugh, and learn.